Good morning, everyone, and welcome to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Well, we have all been concerned about how much our home loans have become expensive, Santo, the past 6 months. You know, the RBI has raised interest rates by about 190 basis points in a span of less than 5 months, 6 months, and it has pinched our pockets like anything, especially if you are running a home loan or if you have a floating, exchange rate. Interest rate loan, it has clearly pinched your pocket. But there could be some good news on the horizon, Santo, because in the spotlight today, we are discussing whether the RBI could pause its rate hikes going ahead. Now, why I want to talk about it, Santo, is because recently some very interesting developments have happened. On Friday, the minutes of the MPC's meeting, or the Monetary Policy Committee, which decides the interest rates in this country, the minutes of their meeting came out. Basically, what they were discussing, what all the members were talking about during that meeting. And during that meeting, it came out that the two external members of that meeting, Santo, actually have started to get worried about growth. Of course, the RBI did downgrade the GDP growth rate expectation for FY23 from 7.2% to 7% in the last policy meeting. And clearly there is now a rising division where there was unanimity not so long ago. Now there is increasing division within the MPC, whether the RBI should continue to raise rates, whether it should pause now and let whatever the efforts they have made take its effect on the economy, see whether the inflation is coming down or not, and then decide if they need to tweak their strategy or not. And one of the reason, Santo, I feel they are doing this is because globally also there is a lot of concern. We know that the global economy is headed towards a recession, as US Central Bank and European Central Bank and the UK Central Bank, they are all in a much tougher inflation fight than we are. Inflation there is at multi-decades high, where at this point of time in India, at least it seems that we can still manage it without puncturing growth.
Well, that said, even as there is debate on where interest rates are headed in the near term, already interest rates are steadily climbing up. You just made a reference to the home loan rates. Also in the bond markets, the 3-month commercial papers, the rates have crossed 7%, which is fairly high. SBI has hiked deposit rates for customers who park more than 10 crore rupees with the bank. So everywhere there are clear signs that already rates are increasing. Now, see, the thing about guidance is, even if you see the minutes of the MPC meeting, one of the points I think which Michael Patra has mentioned is that it's becoming very difficult for central banks to give any kind of guidance, right? It's not just the case with India, but it's the case with the other economies as well. And what is happening is you're having too many factors at play. Now, in India, inflation was thought to be low, but if you see steadily, it has been inching up and now it has reached the 5-month high, and there are other factors at play. So, for instance, food inflation, you can't do much about it. If there are unseasonal rains, then food inflation is going to go up. If the US decides to hike rates, you may have no option but to increase your rates back home also, so that the differential between the US Treasury and the Indian government bond is not very high. So, there are too many factors at this moment, and let's not forget that central banks everywhere got it wrong, have been getting it wrong for almost 18 months now, and it's becoming, and finally they have come to a point where they say, look, we'll look at what the data is and then probably decide on that. So, to give guidance of any kind, one way or the other, CJ, I think just makes no sense at this point.
I think, Santo, I don't think, of course, the RBI, at least the RBI members of the MPC, they have not indicated in any way, they have not given any sort of forward guidance, although their commentary, it seems that they were more focused on inflation at this point of time, right? And that would make you think that probably those members at least think that given that inflation is still above the the band of 2 to 6%, which is the comfort zone for the RBI, and of course above its long-term inflation target of 4%, there is need to increase interest rates. But if you look at what the market is sensing, Santo, right now, again we have talked about this in the global context, where it is the market versus the Fed, wherein the market is saying that you will have to cut interest rates by March, whereas the Fed is saying that we are going to be hiking interest rates well into 2024. So clearly, now that fight has also now become in a local level as well, wherein the market, the government bond market in India, is indicating that RBI may just raise interest rates by another 35 basis points come December policy meeting, and after that we could have a long pause. Of course, dependent on how data also behaves, whether inflation comes down. RBI has indicated that inflation will come down to about 5%, 5.5% level by the first quarter of 2023, 2024. But I think market again is sensing that there is a pause on offer. And if you look at why this is happening, because after the previous policy meeting, Santo, the market was in the thought process that the RBI will have to raise interest rates by as much as 100 basis points more to contain inflation. But after the minutes came out, that expectation has climbed down to just 35 basis points. So that goes to show that there is a battle between what the market expects could happen given the context of global recession, given the context of slowing domestic economy, and what central bankers want, which is to lower the cost of living burden that almost every economy at this point of time is facing.
Well, fair points there, CJ. My only concern is that even though you may not see aggressive rate hikes going forward, there is a risk that inflation could stay elevated. Now, if it stays elevated, then you're not going to see too many cuts either, which is what the market seems to be counting on at this point in time.
I think if market is counting on a cut, I think, guys, you are getting it way wrong. I think unlike the US, I don't think we are in a US sort of situation where there could be a technical recession on the offer. India is not going to go through a recession, and the slowdown is also expected to be very, very minuscule compared to what we are seeing globally. So I don't think RBI also, Santo, if you look at RBI's behavior the past 3 years, ever since Shaktikanta Das took over as the governor, they have largely been very much focused on growth. I don't think they have that much of a that hawkeye approach to inflation that probably maybe their predecessors had. So I think therefore RBI could be much more balanced and much more nuanced in his fight against inflation than say what Jerome Powell currently is trying to do in the US, wherein he's trying to become the second Volcker.
Well, and with that we move into a market setup.
Yeah, Santo, and the trade setup today is looking a little muted. I think Wednesday morning, so it seems like the market is also having a downtime on a Wednesday morning. And if you look at the exchange Nifty, it's indicating only almost 20 point gap up, not a gap up, actually a 20 point up move on the market. So we will have to wait and see whether some bit of profit booking creeps in after 3 days of very strong gains that we have seen in the market, or do we build on this gains, because the cues or the handover from Wall Street overnight was very, very strong. If you look at benchmark indices in the US, they were higher by about 1 to 1.5%, largely on the back of some very strong corporate earnings that have come out in the US, especially from the banking side. So I think, Santo, corporate earnings again will remain the toast of the town at this point of time. They are the one pillar of the market that have been consistently performing over the past few quarters, and investors will hope that as long as this earnings momentum will continue, bulls can rejoice going ahead.
Well, some profit taking is only to be expected, CJ. We've had 3 good days of up move. But the second thing, a point you made about earnings, my concern here again is the same thing, that a lot has already been discounted. Of all the numbers that have come in so far, you have not seen any big jump in response to the earnings, barring 1 or 2. In most cases, I think valuations are pretty much fair, reasonable, in some cases even expensive. So even if the companies continue to deliver what was expected of them, I don't think that will make much of a difference. You need some very strong outperformance here at this point in time to be able to post some decent gains.
True, but that also does not mean that we have to see sharp cuts as well in the market, Santo, because that means that the support also is pretty firm and pretty strong at this point of time, given that downgrades probably will not be as much, because as we saw in the first quarter, when everybody was fearing that we could see very sharp downgrades, the entire BSE 500 only saw a downgrade of about 5% in its CPS. So I'm hoping the continuation of something like that will happen even after the second quarter as well.
Well, there are stealth downgrades, but we'll discuss more of that later, and let's move on to the newsmakers
Yes,
segment.
and the newsmakers today, well, the first one is L&T Technologies. Very surprising earnings, Santo, today. The stock will largely be in focus after very healthy second quarter numbers, surpassing estimates of brokerages on interest, on net profit, revenues, as well as margins. So if you look at the margin performance, margin of course were in focus, because a lot of expectation was that because the company took a wage hike in the second quarter, Santo, margins could come down by as much as 75 basis point. However, they only came down by 10 basis point on a sequential basis. So clearly there is a lot of resilience that the company is showing, and I think at this point of time, Santo, I think it is one of those stock within the IT space which is looking very, very solid, even though some of the brokerages out there are not convinced that this momentum can continue?
Well, stock is down almost 40% from the peaks of January, and among the stocks which have fallen the sharpest from their peaks. The good thing, however, about L&T Technology Services is that it's managed to maintain its margins consistently.
Yes,
that is indeed surprising. Well, the other stock in focus today is likely to be ICICI Lombard. Again, a decent set of second quarter numbers there. Also, the company has been trying to grow its health insurance business, and at least those efforts seem to be bearing some kind of fruit at this point in time. You have decent profitability. The premium growth has been 17% year on year, and ROA for the quarter has been at 19%. So this is something that market will be taking note of, and already you have brokerages like CLSA and Credit Suisse sounding very upbeat on the stock.
Well, Santo, next up is our hot brokerage bets. Now, on the brokerage bets today, the first stock on my radar would be Pidilite. Now, Prabhudas Leeladhar came out with a short note on the stock, largely on the technical side, basically, wherein they are expecting quite a good runway for the stock going ahead in the medium to long term as far as the technical charts are concerned. Now, according to Prabhudas, the stock seems to have found a very, very solid support, Santo, around the 2600 zone after the recent correction that we have seen. Now, the correction largely happened because, of course, Pidilite was among those very expensive names in the market. And during the volatile times, these sort of expensive names tend to take a little bit of a beating or some bit of profit booking. But we know that the first quarter earnings of Pidilite did surprise us quite sharply, and I think at least on the fundamental side, there is no point of concern there. Also, Prabhudas also has said that if you look at the RSI or the relative strength index of Pidilite, that has also now made a trend reversal from oversold zones, which is a very, very bullish sign, and goes to show that there is a lot of potential upside in the stock going ahead. Prabhudas is at this point of time indicating that you could start accumulating or buying into the counter with a stop loss somewhere around 2,590, with a target as somewhere around 2,980 rupees for the next couple of months.
Well, Sher Khan has come out with a buy rating on APL Apollo Tubes. It has not given any price target. Sher Khan's argument is that mainly that the company has a very strong market leadership in the structural steel tube segment. It's about 55%, and two factors. One is capacity addition, and also the launch of innovative product will help APL Apollo Tubes expand that market share. Besides that, the merger of one of its group companies, which is Apollo Tricot, is expected to be both earnings accretive as well as improve the quality of earnings, and Sher Khan expects net profit of APL Apollo Tubes to grow by 33% at a compounded rate over the next 3 years.
Well, Santo, moving on, our stock takes of the day. So there are 4 names today, if I am not wrong, Santo.
Yes.
Starting off with
Tata Coffee, a good set of numbers for the September quarter. Now, the bottom line was largely enhanced because of a huge other income component, so I won't really get into that. But if you look at the top line, there's been a huge jump year on year, and even quarter on quarter, there's been about a 9% increase, which is quite heartening. The company has said that realizations are improving, and also the sales of its plantation products has been higher, and at this point it's a high input cost which is hurting the company's earnings, but that is expected to get better going forward.
Well, Santo, before I make my counter, I think we should take a look at the market, and it has been actually a very decent opening, Santo. We were expecting only a 20-point up move, but if you look at the Nifty, clearly higher by about 65 to 75 points at this point of time, whereas the Sensex has made a good start of over 200 points, Santo.
Well, yes, that is also partly due to the fact that there's a fair differential between the Nifty and SGX Nifty. So 20 points there and 75 points here. The gap always remains more or less constant. Big gainers in early trades, we have Asian Paints, Bharti Airtel, Bajaj Auto, all these stocks are up by close to about 1%. The NSE advance to declines ratio is in favor of the bulls.
Very strong, very strong.
Close to 1400 stocks trading higher, and less than 300 stocks are below the previous close. Nifty mid-cap index up about 1%.
Yeah, and Santo, I think sectorally we have almost all of the sectors in the green, barring a Nifty Media Index, which is largely down because of Z Entertainment, I'm sure, because that stock must have seen a little bit of profit booking today after a very, very strong bounce back yesterday. But some of the sectors that are doing quite well in this morning is Nifty Bank, Nifty Auto again. I mean, the entire rural theme, rural revival theme, the festive demand theme. Clearly, a lot of investors at this point of time have a benign view on the automobile space. Apart from that, Nifty FMCG is doing quite well, and the Nifty Realty Index also. It has been rallying the past few days, largely on those expectations that probably the RBI may pause on interest rate hike, and that probably would not lead to any sort of demand destruction that could happen. So I think Santo, a very, very strong start, and hopefully it may continue, going into the end of the session. Now coming back to Tata Coffee, Santo, one of the concerns, one of the things that stood out for me, concerningly, was the margin performance this quarter. The margin performance was quite weak, largely because of the high input costs that they are facing in the tea business, as well as the coffee side as well. And I think, therefore, given that the outlook on cost side is still quite hazy for Tata Coffee, I think this will something that may just weigh on the stock performance going ahead. Apart from that, if you look at geographically, the Africa business is not showing any signs of recovery. The weakness there continues to persist because of high inflation. I mean, a lot of economic distress is in that continent, largely down to the strength of the US dollar that we have seen. But thankfully, other markets are still doing quite well. I mean, including India, including Russia.
Vietnam is also doing pretty well. There's been some recovery there, which the management has mentioned.
And even Russia, Santo, which is a market, I mean, such a chaotic market at this point of time because of the ongoing geopolitical issues there. But clearly, other markets are trying to do the heavy lifting for the loss that the company is seeing in Africa. But overall, I think the other concern would be the tea business, because there has been an adverse, weather conditions across India in October, and whether that affects plantations, whether that affects supply, I think that is something to watch out for and keep an eye out on. Well, the first stock on my radar today,
and probably also the last.
Yes, absolutely, is KPI Energy. Now, very interesting, earnings from the company, a blockbuster number. Actually, if you look at it from a year-on-year perspective, net profit has surged about 73% on a year-on-year basis on the back of very strong sales momentum. Sales almost tripled on a year-on-year basis, clearly showing that the company is getting good traction in the space that it is in. Now, it remains a good place, Santo, on the overall renewable energy theme. And I think going ahead with demand traction that we are seeing at this point of time, the sort of investment that we are seeing in this space, I think KPI Energy has flown under the radar so far, but could come out into the limelight going ahead.
Well, it's been almost more than a 10-bagger for investors who had put in money 3 years back, and it's quite interesting how there's been a spectacular jump in its top line. It's been a
yeah, I mean, one of those theme stories which are actually also delivering on earnings. So sometimes you only have themes and narratives, but no earnings.
In this case, the company's top line growth at least seems to back the investors' faith at this point, and also justifies the steep run up in prices. My only quibble is that the borrowings of the company have risen quite sharply. There is also the cost side which needs to be taken care of. So that would be my only counter argument against the stock, CJ. Well, next stock is Canara Bank. Now, this is a stock which brokerage house Haitong has recently initiated coverage with. It has rated the stock as an outperform and has a price target of 290. So the main arguments of Haitong is that now Canara Bank is the 4th largest public sector bank, and it had seen strong growth during the period between FY15 to FY18. It had made a lot of corporate loans, and a lot of them turned bad, and which is why you had seen a severe deterioration in asset quality. But now Haitong feels that the stress on asset quality has considerably eased, and things are only likely to improve from here on. Besides that, it sees a 12.5% growth in its loan book at a compounded rate for the next 3 years, and net profit is expected to grow at 26%, again compounded over the next 3 years. The net NPA ratio for Canara Bank at this point in time is the highest compared to other public sector bank, but if you look at its net interest margins, they are pretty much in line with what its peer group has been reporting.
Santo, clearly, I think on the fundamental side, things have been looking quite bright for a lot of public sector banks. So I think there is not much to argue there. But on the technical side, it's a very interesting stock because it's been, lagging in the neutral zone. If you look at some of the momentum indicators, the stock has been lagging in the neutral zone for a couple of months now, and it seems like there is a bit of a fatigue on this counter. Investors are not able to make up their mind whether there should be more, re-rating on the stock, or whether they should wait for earnings delivery to happen, for loan growth delivery to happen, and then take a view on the counter. So therefore, given that the stock has, of course, if you take away the past couple of weeks' performance, if you look at it from the 52-week low that it hit in June, there has been almost a 45% bounce back on the counter. So with that sort of a bounce back and with the earnings coming tomorrow, I think today there could be a little bit of profit booking on the counter, and of course a new view could be formed after the earnings come out tomorrow, in tomorrow's trading session.
Well, last stock on a watch list this morning is Stovecraft. Now, the stock has been struggling for a while. It had risen, it had made a new high sometime in November last year, but since then it's been sliding. But here are some of the points in favor of the stock. Phillip Capital has initiated coverage on Stovecraft, and it has a price target, a fair value price target of 742 rupees, and its bull case is about 787 rupees. Now, according to Phillip Capital, the company has grown at a faster pace compared to its competitors over the last 3 years, and distribution expansion and its value for money proposition, these are the two key triggers to watch out for in the days ahead, and which could help the company grow its market share. And Phillip Capital expects a 16%, 19% compounded growth in sales over the next 3 years, and net profit to grow by about 31% over the next 3 years.
Santo, clearly, I mean, Hawkins, Stovecraft, all of these companies have been, quite bullish from our point of view, because we are of the view that at least going ahead, the the kitchen utensils space, or that home improvement space will continue to do well. And even though the pandemic looks like it is phasing itself out, demand for these sort of products at least so far not gone out. That said, Santo, let's quickly take up some of the questions that have been coming out from our viewers. Thank you guys for utilizing the hashtag AskMC, and you can keep on posting your questions. Santo, the first one is from Himanshu Singh. He wants to know whether what is your thought process around CDSL? This is one stock that you have been talking about a lot, and is it possible that it could go above 1400? Well, we can't always know about that, but CDSL, what do you think?
Well, the business model is quite good. Now, the initial run up in the stock price was driven largely by the increase in demat accounts. Now, that seems to have slowed down a bit, but it has many other triggers as well. One of the things mainly is that the IRDA's directive that insurance policies should be now held in the dematerialized form, that is also likely to be a big trigger for CDSL going forward. So, it is not just the capital market segment alone, it is helping out with many other government projects also. So, it has got multiple cylinders at this point in time to fire at, and it's a longer term play. The initial euphoria over the increase in demat account, that seems to have subsided for now. Now, the heavy lifting will have to be done. You need to see consistent improvement in earnings over the next few quarters, probably before you see the next round of big re-rating in the stock.
That is true, Santo. Karthikeyan V, I think he has sort of view on HIL. HIL, if I'm not wrong, Santo, is a construction play basically, and the stock has actually taken quite a lot of beating over the past year, almost down about 46%. But Karthikeyan, if you look at it technically, it seems like at this point of time the stock is still in a bearish momentum, in the bearish zone. It is largely trading below its 50-day as well as its 100-day moving average at this point of time. So clearly, from a technical point of view, there does not seem to be a lot of momentum in favor of the bulls. But fundamentally, the construction sector is one sector that probably could be in focus heading into the next 6 to 12 months, largely because a lot of government capex will come out. A lot of real estate companies are also, getting into the construction phase going ahead. So I think overall, the outlook for the sector seems quite good. But whether HIL will be able to benefit from that, I think that remains to be seen. We have to still see whether the company can deliver on the earnings performance or not. And if you look at it from a short-term technical point of view, clearly the outlook seems to be a little bearish at this point of time than bullish. Santo, another viewer, Funny PG, he has sought views on Tata Chemical and NHPC. So I think NHPC, I have not really tracked that stock that much. So I think I beg you, I apologize that I'll probably not have that much view. But Tata Chemical, Santo, what do you think?
Well, soda ash, the outlook on soda ash is pretty strong, and the company has said that the tight supply situation should continue for a while. That is what seems to be driving interest in the stock. It had reported very strong first quarter numbers. Stock rallied, then saw a sharp dip, but once again it has started rallying again, because mainly driven by the outlook on the soda ash. The bigger play is that there are some smaller themes also, but at this point the overriding theme clearly is.
Yeah, I mean, among the smaller theme, of course, the EV battery space that Tata Chemical is trying to get into. I think that is another long-term growth opportunity for the company. Apart from that, if you look at technically at this point of time, the stock is almost, mouth-watering, given that it's trading above largely most of its major moving averages, and even on a monthly scale, Santo, the outlook, at least according to MC Pro or Moneycontrol Pro at this point of time, seems to be very bullish, funny PG. So there it is, guys. You have your views. Keep on posting those, questions also in later episode. And we will try to take up during the show. But if not during the show, we'll take it up, in the coming shows as well.
Definitely. And with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and thanks for posting your comments and asking questions as well.
And guys, keep following us on the social media links that you can see at the bottom of your screen. And I don't need to say it. You only need to be on moneycontrol.com, and you can also download our app Moneycontrol from Google Play Store and Apple Store to track all the financial news. So of course, we'll catch you again at 3 p.m. with all the day's action. Until then, hopefully you will have a great trading day.